Welcome back. Let's focus on the banking space and the initiatives that were announced by Raghuram Rajan the day he took over as the RBI governor. He mentioned on the issue of competitive banking that very soon free bank branching for domestic scheduled commercial banks would be brought in, and according to reports, RBI would be issuing a circular on this very, very shortly. What are the implications for the entire banking sector? Shifali has those details. Shifali.
Hi, sure. This will definitely come in as a positive for banks, especially for the private banks. Quoting Credit Suisse here, they are saying that this is particularly positive for mid-sized private banks, and also they think that RBI might maintain requirement of 25% of new branches in the unbanked area, because not all might still be interested in going to the rural area. So that requirement of 25% might still be there. Also, especially considering the fact that new bank licenses will also be issued. So for them, as it will be a requirement, but for the mid-sized PSU banks, it will be definitely a great opportunity to expand into these rural areas and also expand their CASA base, because remember, in rural areas the savings deposit ratio is much higher than that of the urban branches. So that will be a significant positive, because the retail deposits are usually the low-cost deposits. So from that perspective, it will be beneficial for the mid-sized PSU banks, and also it takes new branches typically 24 to 30 months to break even. So in rural areas as well, so that's almost equal to the amount of time it takes the branches in the urban areas to break even. And it's not just the mid-sized PSU banks. A study done earlier on HDFC Bank showed that HDFC Bank, from being primarily an urban branch focused bank, earlier its branches in the urban areas used to be about 80% of its total branches, but now it has expanded more into the rural areas, and it's little less than 50% of its branches are in the rural areas. Also, the report showed that the share of saving deposits is much higher in the rural areas, so that's also beneficial, and the break even of the non-urban branches is also 24 to 30 months, which is almost equivalent to that of the urban branches. And mid-sized PSU banks, they've already been growing at the rate of 20 to 25%. So this move will further help them to expand their reach. So definitely coming in as a positive for most of the banks.
And let's extend the discussion, bring in an industry voice and an expert in this space. Ashwin Parekh, Senior Expert and Advisor, Financial Services at Ernst & Young, is with us from Mumbai. Mr. Parekh, thank you so much, sir, for taking time out talking to us. Well, of course, we've been analyzing Raghuram Rajan's agenda for the banking space over the last couple of days. What do you make of, let's start off first by what my colleague was talking about, free branch banking there, allowing banks, scheduled commercial banks, to expand without the requirement of official approval from the RBI. What do you make of this development, and how significant it is for the sector expansion?
It is very significant. I mean, one must admit, there are two parts to it. One is, as far as the framework is concerned, which is already available with the RBI. What the RBI has done over the years is, it has actually classified all the territories, all the regions, all the areas, and very clearly put out what is supposed to be unbanked, what is tier 5, 6, 4, 3, I mean all of that. So the framework is very much available. Now what the new guidelines, I mean what perhaps the governor may be hinting at, is then within that framework, the banks can go out and open their branches as long as they maintain a certain percentage of the breakup, let's say, between tier 1 and tier 6, which soon may come out. I mean, one of the suspicion is, or people suspect, that he may open up the entire part. He may say, look, anybody can really take up any particular bet, any risk can go anywhere he wants. My take is that there are two parts to this. One is the liberalization and allowing banks to do what they want in terms of the branch expansion is a very nice move. It takes away a lot of unnecessary approval process, because in any case the framework is available. The banking system knows what are the unbanked states, branches, locations, so they can really go out and expand in those. The percentage of new branch expansion, which will be more like a self-regulated environment of the banking system, and they will have to keep the regulator informed, is where perhaps we await more detail, more guidelines. If the 25% of rural presence is still maintained, personally I believe that would be a very good thing, because all Indian banking, whether it is private sector or public sector, must look at inclusion more seriously, right. Must look at going to the tier 5 and tier 6 locations as well.
Right.
So personally I'm not really trying to say a bit too visual and say that that may be removed. But apart from that, the branch expansion and allowing the banks to do that in keeping with their business plans is a very good move to my mind.
Right. Mr. Parekh, the thing that got me really excited was the mention of on-tap licenses. Now, fit and proper, that's a definition that the RBI has given out, even though the fine print is not really mentioned, but on-tap licenses make sense, because if an entity is coming under the fit and proper, then what's the problem? Let it be an on-tap case. Let's not make it a once-in-a-while affair or a once-in-a-5-year affair. What do you make of that on-tap license? Do you think that's a significant move here, perhaps the most important one?
Yes, I mean, I would readily agree that it's a very significant one and an important one. Let me articulate. Let's say there is only one thing which is essential, and I'll come to in a little while. But let's say the first thing and the foremost is no regulator in this world, in any other jurisdiction as well as in India, can really describe fit and proper, in as much of English as he may wish to, because there will always be a certain element of judgment that the regulator will have to exercise. So, I mean, even if he lays down, some various 1 to Z, A to Z kind of requirements, yet the regulator would still like to examine any application that comes up on the basis of some evidence, let's say, that the application provides. So that's one part of it. Second is, if you are looking at on-tap licenses, then the whole rush about, getting into a time frame within which you must submit your application. If the window is closed on you after that, you do not get your license, then there becomes a certain amount of scramble for the license itself has some value. Then in that case, all that is taken out, which is to my mind a very good move. Like insurance companies or like asset management companies, whenever a promoter finds himself to be in fit and proper kind of condition, has adequate resource which is essential to make him put up a bank, he may go to the regulator, seek a license. The regulator will examine. If he finds that the application is in keeping with what he expects, he may sanction him an in principle approval,
So I wanted to get your views on the SLR comments that was made by Dr. Rajan. I think that it's perhaps important because now the RBI is perhaps formally, acknowledging the need for a reduction in SLR. And I remember sometime during a banking summit, sometime earlier in August, even Dr. Subbarao had given out a soundbite to the media saying that I do recognize that there is a demand and perhaps even a need for a further reduction in SLR. Do you think it's a bold sort of a move if it comes in, and what kind of possibilities or how much headroom is there to reduce SLR?
Yeah, I mean, see, I would read this comment in keeping with also the comment on the community banking and small banking and regional banking, which the governor has talked about. Now, I mean, the SLR CRR regime will go in keeping with the kind of license you are seeking. Unless you have differential PSL, SLR and CRR requirements for different kind of banking that you carry out, the universal banking, I mean, you cannot wish that away. Everybody will follow the same formula. Coming to SLR, I mean, the industry views it as some kind of a tax, or some kind of a payment, which is, I mean, it's like the regulator's risk premium that it charges in de-risking, particularly from the liquidity risk, the de-risking the sector and making sure that the risks on the deposit holders, whenever there is any go on any particular bank, are to some extent, let's say, taken care of through the SLR cushion that may be available with it. As we go along now, and we open up licensing and more companies go about, seeking licenses, that's exactly what is being talked about. Then in that case, the need for that cushion and therefore the need for the government and the regulator to create a substantial tax or an SLR kind of a regime may not be necessary,
Right, so thank you very much for your views. Apologies, we're running short on time, so we'll have to wrap up the conversation here. But we hope to be able to have you soon on one of our shows very soon to be able to chat with you at length on furthermore the changes that are brought about by our new RBI governor. Thank you very much for your time. With that, we're almost at the close of this edition of Power Lunch.
Stay with us.